This is in response to Dr. Paul Krugman's article in the New York Times on Monday, April 11th, 2016, Snoopy the Destroyer. Now, what has basically happened is that MetLife got a favorable ruling that could affect the financial system. Now, it will be appealed, but the indication of all of this is that, hey, when things happen here, it can have a big effect later on down the road. And if this goes through, then a non-bank like MetLife, because they're not going to be regulated like a bank, could really screw things up in the system. So back in 2008, the financial system went down into the tubes. Three big non-banks were a part of that. Lehman Brothers, something called the Reserve, and AIG. Lehman Brothers was a shadow bank. Before that, there was a company called Bear Stearns that went down in like May or so of 2008 that sort of precluded all of this was going to happen. And they were non-banks. They were making non-traditional loans. The Reserve ended up liquidating. AIG, which was not a bank, but basically an insurance company, but was insuring all of their shitty loans, would have gone down the tubes unless they'd got an $85 billion line of credit from the United States. I don't know who was the Federal Reserve or whatever. But what this shows is that traditional banking and banks that are regulated have a great deal of interconnectedness with non-banks. And when non-banks get favorable rulings that they don't have to follow, some types of regulations, then this could really screw things up in the future. Especially what we've seen is that it wasn't the banks were too big to fail in 2008, is that there was that interconnectedness between non-banks, Bear Stearns, Lehman Brothers, the Reserve, and AIG, which screwed a lot of this stuff up. Now, so MetLife won a ruling, not necessarily because they don't want to be regulated in the same way that banks are regulated, because they're not really a bank, even though they're have a tremendous amount of other financial types of things. And of course, they won it on an aspect that they felt that the government needed to do a cost-benefit analysis on what would happen if they had screwed up. But here's the thing, this is a very dynamic world. You start to put together a cost-benefit analysis 2 or 3 months ago. You come up with it now. Things have changed completely, depending on that institution, on the world, etc. So it's very difficult to do a cost-benefit analysis. Things are fluid; they change. You have schedules that financial institutions need to meet, so they don't go into that bad area where they can actually lose. So this is kind of like a loophole. But if they win this loophole, because it will be appealed, then I won't say open up the floodgates, so to speak, but it'll allow everyone, especially non-banks, to try and appeal this, because they want the least amount of regulation possible. And of course, when you have that least amount of regulation possible, because remember, George Bush came in and he was the banker's buddy. And even when he got up in the financial crisis and said he didn't believe in government intervention, but his good friends, who were running the Treasury, what was that guy's name? I'm looking at his face, but I can't. Paulson was his name, and of course they believed in all of that. And Paulson had been part of I can't remember which name of that firm is. Okay, but he didn't believe that the market should regulate it, not the government, but the government had to step in. So again, this is a ruling. It may affect things a lot further down the road. It should be brought out right now, because you got to remember that if you have a Democratic president in the White House, there will be strong oversight of these non-banks. But if you have a Republican in the White House, all bets are off. So kudos to Dr. Krugman for bringing it out, that if MetLife continues this, they may be in a position where a lot of other companies could start going down that road, and our financial system will get slipperier and slipperier. All of the regulation that was put in between 2008 and 2010, doesn't necessarily guarantee us that we will not have another recession or even a depression. But this is something that can make those types of things more likely if we don't have that regulation. That's it for today. Tom Dillon, the Lifetime Liberal. Please look me up on Facebook under The Lifetime Liberal, one word. Join, post, comment, all comments, both positive and negative, greatly appreciated.